So the goal of my calls is only to present you with some really, really good data. And I work very hard and I try to collect this data throughout the year or pretty much every day. And then every 2 weeks, I present it to you guys. So that way you can stay on top of everything, avoid some of the silly mistakes, and don't have to pay for some expensive services to get access to this information. So my goal is to save you some time and save you some money and hopefully help you out along the way. What do I get in return? So I'm not a investment advisor. I don't sell you real estate. I don't do mortgages. The only thing I'm hoping for is that you are so impressed with the services that we provide that you eventually decide to become our client and seek your tax services from us. So that's what we do for living, but rest of it is all to help you out. So let's get started. So once again, this is just a sample call. In the real call, we dig lot deeper, but this will kind of give you a good taste of what we discuss. So let's get started. So how are we doing so far in January? S&P 500 year to date is about 0.20%. So I think we're doing this call around January 20th. First 20 days, we haven't really made a big move. NASDAQ is slightly up 0.8, and then Russell 2000, our small caps, are down by -5. So that's how we're doing so far. And so far, about 9% of the companies has given their earnings report, and 62% of them are doing very well. So if we use that number as a baseline and we feel like rest of the companies will be around the same kind of performance, then we can predict that S&P 500 will do very well. But on the other hand, 9% is just still a small number. We want to see more data coming out. So, as they came out, I will obviously bring to your attention if you are joining those calls. Employment numbers. So as we can see, employment numbers kind of drop back in June 23 and again in October 23rd. But November, they were up. In December 23rd, they were up. Still nowhere close to where we were in March of 21. So, you can see, and these are in 1,000. But one thing for sure, we are definitely making progress. We are starting to go back up. At least that's where the trajectory look like. So that's a good sign. Wouldn't you agree? Wages and salaries are again consistently increasing. So not just that there are more jobs, people are obviously making more money as well. So this data also looks pretty good. Unemployment. So this might surprise many of us that a lot of us thought that unemployment will continue to grow. But as you can see from December 2022 till December 2023, so almost an entire year, unemployment has been stable, about 3.5%. So people still have jobs. So think about it. People still have jobs. Salaries are still growing. More people are getting jobs. I mean, what is that telling you about economy? So when people try to send you these scary messages, scary videos, scary TikTok predictions, this going to crash, that's going to crash. I mean, that's just people's opinion. And I think the purpose of my calls is look at the data yourself, and then you figure out what do you think what that data is telling you. I think you will have a better success if you use the data yourself instead of relying on other people's opinion. As we're speaking, we had this incident with the Boeing where one of the doors, or I don't think it was a door, it was just like a regular window, just kind of blew off mid-air. And that had a significant impact on the airline index. So as we can see, year to date, we're already -10%. So airline industry not doing too well this year. So some of you guys who believe in airline, you guys think that economy is going to do very well. People are going to travel a lot. This might be an opportunity. And if you feel there's some more pain ahead, if we're going to be getting in more trouble in next few months, then this might not be a good time. You might want to wait. So once again, just look at the data and make your own opinions. Housing market index. So this is an interesting one. A lot of time, especially in real estate, if you watch these real estate gurus, realtors, and let's just say motivational speakers and influencers, you watch those videos and you'll take a look and you'll see, oh my God, interest rates are rising, real estate market going to crash. But were they paying attention to data? What was data telling them? How are they coming up with the predictions? Who knows how? Because they didn't share that information with you. They just said, hey, Feds are increasing rates and real estate market going to crash. That's it. That was the end of it. And we believed them because, hey, who else supposed to know better than our local realtor? Once again, I'm not bashing out realtors. A lot of realtors are my client, and they're great people, and they work very, very hard. They have side hustle. I I have a lot of respect for them because many of them don't really get paid unless they actually sell a house. So that takes a lot of effort. And yes, they do need to marketing. They do need to do videos and all that kind of good stuff. So if please don't get offended if with what I just said earlier. My pure point was even realtors, I would encourage them to study more data in real estate and present that data to your clients instead of just making random opinions based on your feelings and based on your beliefs. So if the more accurate you can be. Now, what I'm showing you is more like a national data, but again, each market is a little bit different. So I think this is where realtors can really add a lot of value to their clients by looking at their local data and presenting that to their clientele and their prospects. I think you will earn a lot of respect from your client. Now, I also run a real estate market outlook calls. And obviously I do it for nationwide stats. And then we try to take a look at some of the local stat as well. But if you're a realtor or maybe you're in the mortgage industry and you want to partner up with me to do some of these webinars together, definitely reach out to me. I'm easily available. You can reach out to me over WhatsApp and let's talk and let's see if we can add some value to your community. Because I strongly believe that this data is publicly available. It's just that people don't look at it because people are so busy either looking at the stuff um, that attracts the greediness of human being or the fearful nature of humans. So either the news that are, oh my God, the real estate market is going to make you 10x, or videos that are like, oh, don't buy in 2023 before watching this video because the market is about to crash. Those are the kind of videos that trend. But again, who cares about trending for us, right? Let's try to get the right data in front of people's hand, and I think that will, in the long run, that will better pay off. So that's my strategy. So if you believe in that, then please do reach out to me and let's try to get the right information to your clients. Okay, used vehicle. So here's an interesting one. If we take a look at inflation, and maybe some of you guys are watching this video in future, maybe in 25, 26. So we are talking about January 2024. Inflation in 2023, 2022 was our big problem. And there are many reasons why we are into that trouble, but primarily a lot of money supply. But where is that inflation came from? That inflation came from housing and cars. Those were the two very expensive items. And what we are seeing right now in January 2024 is the used vehicle market is starting to go down. That means cars are becoming cheaper. So that's a good thing. That means we are getting back on right track. This is some interesting stats about different types of cars. What is that information telling us? So once again, come up with your own interpretation, but this is what the data is telling me right now when I look at this information. It's telling me that if I would have sold my used car last year, I would have made more money. This year, I'm going to make less money. And if this trend continues, obviously, I'm going to even make even less money. So, but it's good for economy because cars has gone up quite a bit. They should really come down in prices. Business activity. So I have some data and business. So this is an interesting survey, right? It's suggesting that the business climate remains worse than normal. So take a look at the activities back in 2008 and take a look at in 2020. So that blue line is the current expectations and what were we hoping for. So if you take a look at that number for 2024, we were hoping that that number going to be above zero. That means it's going to be positive business activity. But in reality, it's negative, although it's kind of a little bit trending up right now. So who knows? We'll see how it goes. I'll keep an eye out on it. And I'll obviously, during the future calls, if I see that trend changing, I will try to bring that to your attention as well. But as of today, as of January 2024, it looks, it's worrisome a little bit that numbers are not looking too good. General business conditions, how do they look like? So this is the Empire State Manufacturing Survey. Nobody really pays attention to this survey a whole lot, but right now it's very, very important because if you take a look at that, the index fell by 29 points. That's a huge drop. New orders and shipments are posting sharp declines. What is that telling me? People are, see, so let's slow down for a second and let's break it down. So how does the cycle works? Do manufacturers produce products first and then they ship out the products, or do they get orders and based on those orders they manufacture? So I think majority of us will agree that the new orders are placed first and then the manufacturer starts producing those goods. And because this survey is looking not as good, that means it's a negative, it's telling me not enough orders are being placed right now. Now, is that a long-term trend or is that just a short-term trend? So once again, think, go back to basic common sense and trying to make some outcome out of this data. So in my opinion, two things are happening. In order to place big orders that are going to be delivered, let's say next 3 months, 6 months, a year down the road, what do you need? You need capital. Capital is expensive. Interest rates for business people are running anywhere between 7 to 10%, some even paying more. So capital is expensive right now. So does that mean that perhaps business owners kind of like, saying, let's spend a little bit less right now. Let's try to manage our inventory. Is that what's going on? What will happen when the Feds decrease the rate? Would this number start to go up? So we will keep an eye out on it and see what happens. But see, the data can tell a whole lot as to what's happening. So think about this for a second. So that will kind of give you an idea. Okay, current and future general activity. Okay, so as we can see, that number is also not looking too good. Credit card debt. So this is an interesting one. This is really more about people. So during the COVID time, people saved a lot. People saved a lot and they had a lot of savings. And I think that helped us ride that COVID wave. And that also contributed to inflation. And that also helped us avoid a full-fledged recession. So there was a lot of advantages. But when the credit card debt starts to go up, that means people are depleting their savings. That's why the credit card debt is going up. So it doesn't look too good. It's starting to go up. So we got to keep an eye out on it as well to see if that number goes up in future. And if it does, what are some of the other trends are looking like, so that way we can make some more educated decision as to what's happening in the market. So purchasing manager index, I think that's a good one. So we talked about earlier what's happening with manufacturing, but this is interesting one. But what is happening with people who are in charge of buying stuff? Well, guess what? In November, that number didn't really look good, but in December, it's starting to improve. Now, obviously, it haven't gone back to, let's say December 2022. So it's still kind of below that number, but it's getting there. So we've got to take a look at it in February and see where we are. Like, is it trending upwards? Obviously, when this number goes up, that means that the people in charge of buying stuff are expecting sales to grow. And when sales grow, the profit grows. When profit grows, the share price grows. So everything kind of goes along with that. So this number can really help us understand a lot of data. On the other hand, the income is not growing as fast as inflation is, at least not yet. For example, the last quarter, the income grew by only 0.86%, and the quarter before that, it grew by 0.96%. So growth is just not there. So that means inflation is eating up a lot of our lunch. So be worrisome about that. Improved inflation views lift U.S. sentiments to the highest since 2021. This was kind of an interesting news that caught my attention because, all of a sudden, U.S. public sentiments are improving. And when people feel good, that means they're willing to spend more. If I would have asked you before showing this stats to you, you would be saying, well, I'm a little bit worried. But the stats are telling us otherwise, that the sentiment looks pretty good. In matter of fact, Goldman Sachs came out and said U.S. economy will grow by more than double the market consensus by the end of 2024. So it predicts that the U.S. GDP will grow by 2% this year. So we'll see what happens in 2024. We'll see if that prediction comes true. But these are at least gives me an idea as to what some people are thinking. Google Chrome was an interesting one, so keep an eye out. It's still a test. We don't know how it's going to go, but they're working on eliminating the third-party cookies. And if they do that uh, everywhere, then obviously that's going to impact a whole bunch of companies that are their revenue is coming from ads. They will have to find other ways to generate revenue because ads would not perform as good as they were doing that before. So a little bit worrisome. Um, Inflation insurance, as I said, housing is a big contributor to inflation. Auto insurance, I think there's no reason for me to mention that, but a lot of us are feeling that pain anyway. And, auto insurance and housing is basically what needs to come down. If those prices come, I don't know so sure if we can really manage housing, but auto prices are obviously coming down. Auto insurance, on the other hand, is not. So hopefully, when the prices of auto comes down, the insurance industry will also adjust their prices as well. So like I said, this is a demo call that I'm showing you what kind of data we cover in our biweekly calls. So this is January 2024 as a reminder, and 60% of tech workers are interested in leaving their jobs in 2024. So when people are scared of getting laid off, they're not thinking about leaving their companies. They want to hold on to their job. They don't want to leave. They want to be there. But right now, more than half of the people are interested in leaving. So that's an interesting stat. So think about it. What does that tell you about the state of economy? We obviously have money supply issues because Feds are obviously controlling that. So there are some issues with that, obviously. So that can obviously put us in recession. Some of the big ideas that you can kind of interpret from it is that I think the markets still have some friction. So as we are discussing this, I think in next 2-3 months, we can potentially see some decline, maybe up to 10% by March or April. So that is obviously a possibility. And there's always a chance of recession. So don't ignore that. So don't think that, we have a lot of positive news. We kind of have to run by a balanced approach. So there's always that possibility there. This was an interesting stat that caught my attention, that not enough people are getting driving license anymore. So, that's interesting. We already know about the used car prices; they have grown, and obviously new car prices are grown as well. So both are expensive. By the way, so is the restaurant industry. I mean, have you gone out and eat somewhere? How is the restaurant industry doing? Um, so anyhow, this was the idea behind this video, was just to kind of give you a sample of what we discuss in our biweekly financial outlook calls. And then I try to show you how I'm interpreting this data. What am I doing with my money? How am I using it? And we discuss it together. We have a lot of people on the call, and we kind of hammer some of these stats out. And if other people have some ideas, there are a lot of, I mean, I'm not like looking at everything. I'm sure I'm missing out other important stuff. So other people bring that to my attention, and then I share that back with everybody as well. So it's a great collaborative discussion forum where you get to get the real hardcore numbers rather than just getting people's opinion and scary and greedy news out there. So if you're interested in this kind of data, then I urge you to join our bi-weekly financial calls. I think you will find them to be extremely helpful. And once again, there's no investment advice there, no tax or legal advice there. It's really pure data. And if you love data, then I think you will appreciate this kind of call. You will save tons of research time by joining this one call. And like I said, because it's every 2 weeks, you kind of stay up to date as to what's happening in the market. If you want to reach out to me, you can reach out to me via WhatsApp. If you are a realtor or a financial guy and you want to organize an event in your local market, you want to work with me, please reach out to me. If you're a small business owner and you need some consulting help, reach out to us. If you are looking to help on your taxes, definitely we are your source for that as well. So thank you so much, guys, for staying with me and getting this sample call. So I hope you liked it, and if you did, please do share this video and send it in your groups and in your friends and family members. This is public information. I'm not telling you anything that I crafted or I made up. This is all the stuff that is available to everyone. I just find it, organize it, and present it to you on bi-weekly basis. Just hardcore labor. I hope you will appreciate it. All right, guys, thank you so much, and I'll look forward to talking to you very, very soon. Thank you.